Well, Nashville contract volume is up double digits from where it was last year. In this video, I'm going to show you not just what is happening, but where it is happening and even in what price bands. We're going to talk about some of the shifts underneath the surface of the data. But first, let me just say, if you do like these Nashville updates, my opinion changes with the data. And because of that shift, sometimes the YouTube algorithm gets confused. So if you like these Nashville updates, make sure you are subscribed and also hit the notification on the subscription. With that being said, I hope you all enjoy this video and let's get into the data. Okay, so what we see is that active listings are up 13.5%. Now we're gonna break down each county in just a minute. But the point is we have 900 more active listings than we had last year. This is a big number, but it's been shrinking. And it's really important for you to realize that the year-over-year change has been shrinking since June of last year. Now, I personally think that's fascinating because that's when Fannie and Freddie started doing their abnormal purchases of the mortgage-backed securities. I think it is impacting the market. You can see here we were on a trajectory of almost 40% increase at one point last year. This is the year-over-year change going from 2024 all the way to today. Here, I'll do it like that. What you can see is June of last year, we peaked, and the decline of year-over-year growth in active listings, it's been declining since June of last year, and we're steadily declining. Now, this is personally a little bit disturbing to me because when I look at this and I see we're only 13.5% up. Last week, we were 15% up. You go back last year, we were up to almost 40% up. What I'm seeing is that the year-over-year growth is not only stalling, but we could actually go year-over-year negative in active listings by the spring and summer of this year if something doesn't change. Now, I know that's not the narrative. Every single analyst doesn't forecast that. I'm the only one saying it. And I've gotten a lot of criticism lately that somehow I'm trying to pump the market if I tell you these things. And all I'll say is like, if the trajectory changes, I'll change my opinion. But right now, the trajectory, you can see it. I mean, like literally, just draw a line. You take this linear line and you will see that in the next 4 months, if nothing changes, we will be year-over-year negative in active listings. We will have fewer active listings than we did the year before. This is shocking. Now we'll get in a minute of where we're seeing the active listing growth, but let's look at contract volume. Contract volume's up double digits, 11.5%. This is shocking. We have not seen a double-digit increase in contract volume. Let's just look. We have not seen a double-digit increase in contract volume. Really, we saw it in August, and then we haven't really seen it but just 2 other times in the past 2 years. One in the fall of 24, and then that's when interest rates dropped. Okay, and then in the summer for a brief period in 2025, again, when interest rates were year-over-year negative. Now we're starting to see it again. I fully expect it to happen throughout this year, or at least throughout the next month or two, because interest rates, this is the past year of mortgage rates. They've been declining for a year consistently. Last year at this time, we were at 7.07. Today, we're at 6.07, a full 100 basis points. This is significantly lower than where we were a year ago. And obviously, it's translating into contract volume. Now, it's really important to realize that this is a ramp up and that the next most important point to watch on this demand curve isn't necessarily how steep it is, because it's relatively steep as it was in 25, as steep as it was in 23, but how high it goes. And we're going to see that by the end of February, we could potentially have 2,700 contracts. Now, that is the number to watch for. Will we have more contracts by the end of February than 2023? Because this trajectory that we're seeing right now, it is earlier and faster than 2025. It is much faster than 2024. And by this pace next week, we could have more contracts than in 2024. We're tracking with more demand than we've had since interest rates spiked in 2022. Very interesting to watch. But again, the number to watch on this chart is what happens by the end of February. Are we going to have more than 2,700 contracts? And keep in mind, contract volume's basically doubling over the next 4 to 6 weeks. It's doubling. Demand is doubling. People are coming out and they're coming to buy. So the swift change in our market, this is the quickest temperature change you will see all year, will happen in the next 4 weeks for demand in the market. It's very important to watch. Right now, it's up double digits. I cannot believe it. Let's look at median sales price real quick. It's flat. It's basically been flat to negative for the past few days. But when we look at what is coming down the pipe, what we can see is that it's actually going to be up. Median price is going to be up 3 to 4%. Now, the way to think about median price and why Zillow shows something different. See, the median price is what buyers are paying, okay? And the mix of buyers, what they choose to buy. And so median price, when we look at this was the low in 2023, and it's just been moving up ever since, okay? Buyers have been spending more. Now, we've talked about part of that is because the mix of buyers is changing. People are choosing to buy more expensive things, and only those that can buy have been buying, which means they have more capacity to buy more. But nonetheless, over the past 3 years, about the same number of buyers have been buying more expensive properties more and more. And when we look at the median contract price, which tracks very in line with what's going on with the median sales price, what we see is that it's going to be up about 3% in February. So I would expect that the year-over-year contract price is up 3%. It makes sense that the year-over-year sales price would be up about 3%. Now, of course, if concessions come in higher, it may not be there, but that's kind of what I'm expecting for February. Year-over-year price up in median, not what Zillow measures, which is from a seller's perspective, home values. We're still seeing a lot of value come in from the fall, which was very soft. A lot of my buyers got incredible deals in December. A lot of those will translate into January and February comps, and you will see Zillow saying that home values have been falling. That's because sellers are taking less, buyers are spending more, if you can think of it that way. Okay, so what's going on by county? Now I'm going to show you, we'll come back to this, but let's take a look at the neighborhood tracker here. You can see a lot of red in the core of Nashville. Now what this is measuring, just so we're clear, this is measuring a ratio of active to contracts. Okay, so if there's 10 active listings and there's 2 contracts, that's a ratio of 5. And then it's comparing that ratio to the year before. So this red right here represents that there are either fewer listings or more contracts or both than there was the previous year. Let me show you some examples here. Let's take a look at this area of FISC inside the 40 and 440 loop here. We can see there's the same number of listings, but more than double the contracts. Okay, so it's still soft. It's still soft, but it's less soft than it was a year before. Prices are flat. Let's take another area here in the Green Hills area in between Belmead and you can see there's 47 active listings, 4 under contract. Last year, there was only 1 under contract with 36. There's a little bit more active listings, a lot more under contract. And so when you add all those up together, you know what you get, just a few more contracts, a few more contracts, a few more contracts. What you get is a lot more under contract. So let's take a look at Davidson County here. And here's Davidson County. We've got 17% more contracts than we had last year. We're more than 2025, more than 2023, and very likely going to break through the 2024. We're going to have more demand in Davidson County than we've had in 3 years. 17% higher than last year. Now, when you look at the active listings in Davidson County, we're only up 5%. Davidson County is shifting a lot higher. When you compare that to Williamson County active listings, we're up 23%. There's 1,000 active listings in Williamson County, up 23%. When we look at contract volume for Williamson County, it's down 3%. It's not even positive. See, this is what I'm saying when I say there's a shift into Davidson County. You guys, a lot of you think I'm crazy, like, oh, Williamson County schools are so better, the crime, the property tax is better. I'm not disputing any of that. I mean, that is a general consensus among my buyers and among people I talk to. But when I look at what the shift is, right? The shift is saying more people now are shifting into Davidson County than in the past. And in Williamson County, less people are shifting to Williamson County. I'm seeing the shift. Let's look at Rutherford County. Rutherford County demand is up 35%. Now, let me just be honest here. Rutherford County was in the absolute gutter last year at this time, the absolute gutter. So the fact that it's up is really just like demand has come back. But 35%, 220 contracts last year at this time. Now we're at 300 contracts, or 297. And when we look at the active listings in Rutherford County, which this is going to be Murfreesboro area, we can see active listings are only up 10%, which is still a lot, but it's dramatically different, a dramatically different story. And look, y'all, these shifts right now don't mean much because it's January. These are still very low numbers, but these shifts are showing trends that will really make themselves known in a couple months. Okay, so right now, maybe it feels like a nothing burger. You know, I've got a lot of trolly comments on my channel right now, and that's fine. I mean, have a different opinion. I honestly don't care. But in a couple months, if these trends continue, if it's continuing, that's when you're going to say, oh, wow, this makes a really, really big difference to my experience as a buyer than it did when Ethan started telling me about this in January, okay? I'm telling you about it in January. You're getting the hookup. I'm telling you before it happens. So just know that these trends, and again, if we go back to the map, let's go back to the map and we look at this area. This area was so soft. This is where all the price corrections happened last year in the Smyrna, Laverne, and then Murfreesboro area. Lots of price corrections. And now we're seeing a shift in demand in those areas. Here, 7 under contract. We had 1 last year at this time. 33 active listings, so still more supply in this area. But you just go down the list, 8 contracts versus 4. Even though we have a little bit more supply, we have way more under contract, and all those add up. That's what we're looking for. We're looking for the shifts in all these little pockets, all these little neighborhoods, all these little sub areas, and they start adding up to a more in-demand area. There's just a lot more red. It was so blue last year. It was so blue. It was so bad. I kept explaining to people how bad Davidson County was relative to the other areas. And I think it's starting to pay off, right? Prices have been soft. There are areas in Davidson County where prices have dropped. And so now people are starting to be more interested. They have to drive into the office. Prices have dropped a little bit. They can get back in there for less cost. Mortgage rates are now in the 5s. It's pretty incredible to see the shift. And by the way, the wealth migration, it's still going to happen. I keep reading headlines of all the billionaires leaving California. And look, I get they're sensational, but they're not the only people leaving. And the Grove is a very popular area among retirees and among California transplants. I interviewed an agent who's been very, very active in the Grove to get his perspective the other day. But the Grove has been very soft. Even the Grove might, and look at that. That's going to be a new low right there, $402 a foot. It's pretty soft. It's about as low as you get. And I bet they got a concession too. From sales price perspective, 1.9 is about the floor in the Grove. There's a 1.6. It'll be interesting to watch. I want to look at the ratios of active listings to contract volume for the top 15 cities. Okay, here's Hendersonville. There's lower supply on the high end, except for the 2 million plus. But let's start with Nashville. Nashville's tighter when you compare active listings to contract volume. In every price band, with the exception of it's tighter or it's about the same. Okay, 350 to 650. It's a little bit more. There's still a little bit more supply relative to contracts, and then the 1 million to 2 million. There's just a little bit more relative to the contracts, but it's tighter everywhere else. Let's compare that to Franklin. Franklin, you can see $2 million houses. When you see a spike like that, that's the time to offer. So like if you're looking for a $2 million house in Franklin, right? It's never been better for the past 3 years. Okay. And this is what it looks like. You go to active listings, there's 125. There was 96 last year. You go to contracts and there's 10. There's 12 last year. So you can see it's soft in the 2 million. That's what you're looking for. That's what you're looking for. A little bit more supply in the 650 and above, but not a ton. Let's go to Brentwood. Flat in most areas. Let's do Murfreesboro. We were looking at Murfreesboro earlier. Tighter inventory all the way up to a million plus properties. That's where you're seeing a lot more supply relative to contracts. Again, it's very early. Spring Hill, a little bit more supply in Spring Hill. Nolensville, tighter in Nolensville. Nolensville, the time to buy a $1 million house in Nolensville was a month ago when this ratio was 20. It completely blew out. It might have been 40. I can't remember. I just remember it was completely blown out. It's not blown out anymore. It's tightened up. All right. We've got active listings. We have 44, almost double. But look at the contract volume. Now we have 8 under contract. So the time to go under contract would have been a month ago in Nolensville. Now that supply ratio is tightened up. It doesn't look nearly as bad, although you can look at the under 350s there. Okay, let's go to Mount Juliet. I have a lot of people asking about Mount Juliet and Lebanon, the Wilson County crew. Lebanon, a little bit softer, mostly flat, a little bit softer in the 650 to a million, and that's it. Everything else is flat. Let's go to Mount Juliet. Mount Juliet, mostly flat. Again, a little bit softer in the 650 to a million. So if you're in the 650 to a million crowd in Mount Juliet, that's where you want to be a little bit more aggressive. You have more opportunity there than anywhere else. That's where I would be more aggressive. When you look at those spikes, these are active listing to contract ratios. Whenever you see those spikes, that's when you can be really aggressive. So you always look for those spikes. There's one in Smyrna. Hermitage, look for the 650s in Hermitage. It's a great time. There's 30 of them. There was only 18 last year, and there's probably, 2 under contract? 2 under contract. Yeah. So you look for those spikes in active listings to contract volume. That's where, if you're a buyer, that's where you want to be aggressive. You should be getting 3% lower if you're offering. You should be getting at least 3% concessions on whatever the list price is. I fully expect Zillow has been tightening up on their forecast. It's going up. You can see the active listings supply. Active listing year-over-year growth has been shrinking. If it continues to shrink, we're going negative. Contracts are double-digit higher. Y'all, it's a hotter market than it was last year going into the year. Now, if something changes, I'll change my tune. I'm just telling you what's happening. You guys decide what you want to do with the information. And with that, I hope you all have a great rest of the day. I'll see you next Saturday. Thanks for watching.